Welcome back to the Neuro Finance Masterclass. This is day 41 of our 365 Days to Financial Freedom series. Today, we're bringing you an explainer on what is, without a doubt, the ultimate test of your neurofitness. We are talking about recessions and crisis psychology. Look, an economic downturn is a seriously high-stakes environment, and your mental programming is going to be pushed to its absolute limits. So our goal today is to completely transform how you view market crashes. We're diving straight into the psychology of a crisis, and we're going to learn exactly how to weaponize it. Here is an intense question we've got to ask ourselves right off the bat. Where does the money actually go when the market crashes? Just think about the terrifying status quo of a recession for a second. The stock market is violently crashing down. Unemployment numbers are skyrocketing. And the financial media, well, they're screaming from every screen and headline that the financial world is basically ended. It feels like all that wealth is just evaporating into thin air, doesn't it? But is it? To answer that, we have to look at how entirely different minds process that exact same terrifying environment. Section 1. The ultimate financial test. Amateur versus architect. Section 2. The great wealth transfer. Shifting the paradigm. Okay, we need to completely shatter the illusion of a market crash. Listen to this. Wealth is never truly destroyed in a recession. It is simply transferred. And the crazy thing? The direction it moves is highly predictable. On one side, you have the amateur. Driven entirely by impatience and fear, they panic and sell their premium assets at a massive 50% loss just to make the pain stop. But on the other side, you have the architect. Patient, disciplined, and highly calculated. When the amateur hits that sell button, the architect is the one stepping up, buying those exact same premium assets at rock-bottom prices. The wealth literally transfers directly from the fearful right into the hands of the disciplined. Section 3. Blood in the streets. The 18th century rule. Now, this dynamic, it isn't new. Way back in the 18th century, legendary banker Baron Rothschild coined a brutal but absolutely foundational rule for Wall Street. He said, "The time to buy is when there is blood in the streets, even if the blood is your own." Let that intense 18th century wisdom completely sink in for a minute. Even if your own portfolio is bleeding out right alongside everyone else's, that is not the time to run away. That, my friends, is the time to strike. So the absolutely crucial point here is understanding what Rothschild really meant. He meant that the greatest financial opportunities on earth only appear during periods of maximum pessimism and widespread panic. You just can't get phenomenal deals when everyone is happy and the market is booming. Maximum opportunity literally requires maximum pessimism. When everyone else is absolutely terrified and dumping everything they own, that is exactly when the neurofitness investor flips the switch. They become aggressive, they start buying. Section 4. The global clearance sale. Buying at a discount. I want you to completely stop thinking of a recession as a disaster. Just erase that word from your financial vocabulary entirely. Instead, you've got to start viewing it as a Black Friday clearance sale for global assets. Imagine walking in and seeing a tag that says 40% off. The exact same S&P 500 index fund, the exact same premium real estate that everyone was clamoring to buy yesterday. It's suddenly available today at a massive discount. Look, if you liked the asset at full price during the boom, you shouldn't be crying when it crashes. You should be absolutely thrilled to buy it on sale. You're getting the exact same underlying value for a fraction of the cost. But, and this is a massive but here, you cannot take advantage of the sale if you're personally in crisis. And this is exactly why we prepare. Remember that emergency fund we built way back on day 6 of this masterclass? Well, this is exactly why it exists. Your emergency fund is your armor. It's a capital buffer that protects your daily life, your rent, your groceries, your basic needs. And because your daily life is safely protected, your investment machine is totally free to ruthlessly buy up these discounted assets without a single ounce of fear. You simply don't have to sell out of necessity. Section 5. Your crisis action plan. Rewiring your brain. So today's cognitive task is some really deep psychological work. We have to completely rewire your emotional response. Walk through these 3 steps with me. Number 1, rewire your emotions. You have to catch yourself when the media tries to induce panic and consciously choose discipline instead. Number 2, stop fearing the next recession. It is a totally natural part of the economic cycle. Honestly, fearing it is like fearing the winter, right? It's going to happen anyway, so just buy a coat. And number 3, prepare your mind. You need to pre-commit to your strategy right now, before the panic even starts, so that when the blood is in the streets, your actions are completely automatic. I want you to write this down. Seriously, post it on your bathroom mirror, stick it on your desk. Generational wealth is not made during the boom, it is made during the bust. This is an absolute law of investing. The boom, that's really just when the wealth you accumulated during the bust finally becomes visible to everyone else. By internalizing this law, you permanently shift your paradigm. You move entirely out of that amateur mindset and step fully into the role of the architect. Which brings us to our final, pretty provocative thought for this explainer. The next economic downturn is not a matter of if, it is simply a matter of when. The market is going to crash again. The media will scream again. The amateurs are going to sell everything at a 50% loss again. So when that inevitable day comes, I leave you with this one question. Will you panic or will you go shopping? Prepare your mind now, build your armor, and be ready to act.